Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek, and we're seeing mostly lower prices except for Kansas City wheat and feeder cattle futures. And Scott, let's talk just a little bit about some of the pressure that we're seeing over in at least the soybean market. Yesterday was higher with new contract highs in soybean meal, but you've got both meal and oil both lower here today. And so it looks like we're in consolidation mode, especially with the report coming up tomorrow.
Yeah, it would appear that way. And thanks for having me. Maybe found some, bumps of some resistance, I guess, on the soybean meal. And anytime you can find a story, a bullish story or a negative story that is in the soybean market, you're going to see some big movement, and the funds really like to react to some of those stories. And Argentina has been aiding in that friendly tone in the soybean meal and the soybeans, and the market really loved to rally on that. And it feels like maybe we've found a spot that's maybe going to top it out for a minute here. So I think we had everybody lean in pretty hard towards, okay, we're going to have some pretty big bean acres, in Brazil. We're going to have a large enough crop that maybe we need to start getting a little bit negative as our crop approaches, and it caught plenty of traders off guard as it started to rally on through some of those prices. And now I think we've maybe found a spot, testing the market, how strong are some of these shorts going to be. So I think we found a little bit of a spot where soybean meal might have got a little bit too high. I'm not sure the United States is going to see a big jump in business from soybean meal because of some of the South America issues. So to me, we've got a little bit of consolidation and correction coming ahead of that report. Yes.
Yes. And of course, the report tomorrow, we're going to be watching on corn to see what we're going to get for maybe South American adjustments, and really whether we see an increase in ending stocks because of a decrease in corn exports, because demand has been kind of a problem for that corn market, hasn't it?
Yeah, that's for sure. Corn spent a significant amount of time this winter at some pretty high levels, and basis added to that issue in many areas. So it did soften the demand. So that's certainly the question is how much demand did we slow down at those prices? And usually this March report's not going to be the biggest mover as far as the markets are concerned. We're usually 5 minutes later more interested in what the acreage report in the end of March is going to do. But in my opinion here, we're already trying to pencil in that there's going to be a big crop. We're going to plant a lot of acres. United States is going to be good. We've got a moisture pattern shift. It's almost starting to lean towards there's a slam dunk. We're going to have a pretty good crop size, which can be if everybody starts leaning a little bit too hard that way, thinking, yep, we've got big crop coming, and that's why you've got the significant discount in the new crop. But when you look at the projected ending stock number here, the estimates of 1.3, I'm not thinking that's a full pipeline, in my opinion, compared to what we're kind of used to. So maybe the market's got to say, hey, that's maybe on the tighter side yet, until we absolutely have some more hard numbers to stand on as far as acres and whatnot go there. So I think with this last break, maybe it gives the market a chance to have a little bit of a spring rally, and going to give us some better marketing opportunities here in the next month and a half. So I think there's a chance we can get a little rally back here, just because it's not said and done that this crop's made yet, because we're not in the ground. So.
And cash basis has been holding together well on corn. The biggest problem for the corn market really has been the darn wheat market. And when that quits going down, maybe that'll help. Corn has helped out the feeder market, though. Contract highs yesterday, even a few in some of the back months here today. And live cattle may be consolidating a little bit. But, gee, is there really a whole lot negative you can even say about this market, Scott?
Nothing negative at all to worry about in the cattle. That's right. So, well, certainly we're at a time of year that it can put in a little bit of a high. So there's your one nugget to say, okay, third week in March can be a seasonal cash high. Yeah, seasonal cash high there. So there's one thing you could look at, but we've got a market that the bulls are still active, and the supply optimism is there. And as long as demand hangs on and stock market stays okay, we're all okay. I got a stock market down 400 right now. So every time we see some of those dips in the stock market side, we're going to get a little bit nervous. So that's really the main risk that we have hanging over the livestock market, because the supply is tight. cash market is feeling like it's on pretty strong ground. And a lot of the packers do need some cattle. We're significantly below slaughter levels than we've had in years past. So tighter numbers are starting to show up. We're getting through the yearling crop now. So just around the corner, we start to get into the calf crop. And year over year, we're just feeling like that's going to continue to be tight. And as we go out through the year, we're going to see tight numbers. So there's a lot of bulls out there in the fourth quarter. These breaks are finding buyers. Open interest stays up. The funds are still interested. So every time we see a $2 break, we're able to fight it off, shake it off, and move on. And I still think that's the case. Big rally in the feeders yesterday. Are holding it really strong today yet.
Yeah, cash trade 91,000 or better negotiated last week in an up week in terms of the cash market. How much higher do you think we could be this week on cash?
I think everybody's going to stand on firm ground. I mean, that's if you were unable to get that 165 live bid last week, some guys did, some guys did not. You're holding out for that or even higher this week, as long as the board kind of holds together. And I think that it should be able to, but we're not backed up on cattle. Weights are lighter. Feed yards still continue to tell me in some of the winter areas, 75 pounds less than a year ago, 100 pounds less than they probably should have been. So those are large numbers. That's a lot of weight that's coming off the market. So nothing's telling me we've got to get some of these cattle, having to get them moved. I'm not so sure. I think we can hang on, try to ask for some higher prices. There's, every week we're just going to probably add a couple dollars on and try to see if we can get that, get that little bit of a rally there.
So the supply situation totally opposite here in the hog market, and we keep going down there. Where do you think we find some support finally here?
There's been a lot of bottom pickers trying to find a bottom in this hog market and think it can turn around, but we're still in a downtrending market. It hasn't proven anything other than that to me. We usually can rally this time of year, and if it's unable to find a foothold now, starting to get a little bit dicey. I think we see those $100 summer hogs. Maybe they start to look a little bit of appealing as you got a cash index still down here at 78 and see some of those summers over $1. You're going to find a little bit of pressure, maybe a little bit of interest from a hedging perspective saying, hey, maybe I better try to get some of those higher prices while I can. So I have heard that conversation among some hog producers. So because we still have some, decent prices hanging out back there. Of course, feed costs are going to continue to be a problem there, but hasn't found a bottom yet. I would definitely wait for kind of a broken trend line or some kind of a shift before I really got confident enough to try to say, hey, this market needs to turn around here.
All right. Thanks for joining us. As always, Scott Varilek with Kooima Varilek, and that is Markets Now.